Welcome back to The Real Deal with Empire. I'm your host, Ali Fawaz, and this is the podcast where we don't just talk about transactions, we talk about transformation. Whether you're buying, selling, maybe you're just curious, we're here to break it all down for you with expert insights, fun discussions, and maybe even a little bit of myth busting along the way. And today's episode is actually packed with a lot of great information. We're going to tackle a big question that's on a lot of people's minds. Should you buy or sell now, or should you wait? With interest rates and loans options and the market constantly shifting, it's tough to know when the right time is. And that's why we get that question a lot. And that's why we brought in the expert. That's why we brought in Jeff Barry from Milestone Mortgage. Jeff's a seasoned pro in the mortgage industry, and he's going to help us uncover creative solutions that buyers may not even know exist to help them buy their homes. So if you're someone who's been sitting on the sidelines waiting for the perfect time, quote unquote, right, to buy, you're not going to want to miss this podcast. So Jeff, welcome to the show. Before we dive in though, why don't we rewind? Tell me a little bit about yourself. Tell me a little bit about why did you get into real estate and what keeps you passionate?
Well, I'll tell you what, it's been about 25 years on and off, but for the most part, in the mortgage business. My company, Milestone, is started a year and a half ago in partnership with Empire Realty, which is moving forward very well. I appreciate the partnership and all the support.
Nice.
My passion, I'd say...
Now, I know your passion is golf, but besides golf...
Okay, there's nothing more passionate than golf. That's on a different level. Let's keep it there. But my passion about this industry, I'd say, is, a lot of us get people that have, 780 credit, great, hefty, big paychecks. Those are easy to do. You go through it, 2-3 day clear to close, which we like to do, 2-3 day clear to close.
Love those.
I love those. But it's the person that comes to you that has the credit issues, income issues. They don't know what to do. Divorced mothers. And so we sit down. I like to sit down with them. We go over their steps. And this could take weeks or even months. And I tell them how to straighten yourself out. Here's what you need to do, step by step by step. And next thing you know, when we're at the closing table, the happiness you see, coming out of them, that makes everything worth it. That keeps my passion. I love that part.
Yeah, I'd imagine so.
I love that part.
Somebody that way, it really is rewarding.
Yeah, it's very rewarding.
Love that. Let's address the elephant in the room: interest rates. Mm-hmm. Right. So people are freaking out about them. Can you break down what's happening with the rates right now, and how's that actually impacting buyers?
Well, the thing is, historically, interest rates are not that high. If you go back historically, We're actually right in the middle. But the problem is when you have 2% a couple of years ago, and people got used to that.
So people got spoiled.
Yeah, a little bit. They got very spoiled. I remember back in 2001, when it came down to 6.5%, we were celebrating.
Yes.
It was about 8.5%, 9% coming at that time. We were really happy at 6.5%. So right now, going from 2.5% to 7% seems like a big jump. But historically, it's not that terrible.
Yeah. Are you seeing any smart strategies that buyers are using right now to help get around the higher interest rates than what they were, I guess, in the recent past?
Besides paying cash?
Besides paying cash.
Okay, well, besides paying cash, one program I like that I think is underutilized is the temporary rate buy down.
Okay.
Now, this is different from paying points. Like paying points is, much more expensive. And yes, it might be for life or loan, but nobody keeps a loan for 30 years.
Yeah, people typically will refinance.
5 years, that's about it. Yeah. So temporary rate buy down basically says is you can buy down for 3, 2, or 1 year. I'll just give an example. If you do a 1 year buy down, so say you're at 6.5, you want to buy down to 5.5 for the 1 year. Now, if you're doing a point buy down, it'll be like $9,000. Mm-hmm. A temporary rate buy down would be like $2,000, and the seller would pay for it through a concession.
Okay.
Can't get into all the, the X's and O's.
Yeah.
Then for 1 year, your rate is 1% lower. Then the hope is by next year that when rates come down to about that, then it stabilizes, then you get to a permanent rate after that.
I got you.
So that saves you a little bit of money for the 1 year.
So basically after the first year, then you're saying essentially just refinance when the rates are...
Well, it's after the first year, say that now you can do a 3 year, a 2 year, or 1 year buy down. After the first year, if you do a 1 year, just easy to do the math right now.
Yeah.
The rate will go from 5.5 back to 6.5, your standard rate.
And then it stays at 6.5.
Then it stays in at 6.5.
Okay.
But hope is after that, that the rate's still 4.5, all depends. If it saves you one for the 1 year, and I said, one thing about the great agents of Empire, they're really good at getting sellers concessions when needed. Yeah. That's always like working with them because I say, listen, my guy needs a concession. They go, got it, and it's done. And they make the loan actually close much easier and smoother.
I see. Okay, that's nice. What's one mortgage myth that actually drives you crazy, but people still believe it?
The FHA is for first-time home buyers only.
That is a good misconception.
Everybody thinks that. It's not even this.
So why do they think that? I guess let's break that down.
I don't know.
Why is there that idea that
I don't know. I guess it's just everybody says, okay, first time, maybe that's the way they read something, they read an ad. First time home buyer, okay, FHA. So they call me up, I need an FHA. I go, well, what's your credit score? They go 800. I go, you don't need an FHA loan. It's more expensive and it's not necessary. You go conventional, 3% down. The down payment is lower and it's cheaper for you. FHA is more for mid to low credit borrowers. That's what I would use it for. But the other thing is, so I have to explain to them, it's not only for first-time home buyers, it's for everybody, anytime, anywhere. So
that's another thing you touched on, though, that everybody typically knows or has the idea that if they do an FHA, they can get a 3% loan. You're saying also, no, you don't have to do FHA to get 3% loan. You can get a conventional at 3% as well.
Well, FHA is 3.5% down. Conventional was 3%.
Okay, well, even better.
Yeah, so that's my thing. Say, listen, if we can go conventional, we're going conventional.
There you go. You heard it here. A lot of people are hesitant to buy because, frankly, they think that the rates are going to drop next year, right? And so that makes people pause and second guess and question, is waiting actually the smart move or is that a mistake?
I don't see why you want to wait. If you see a house that you love, okay, so maybe interest rate is 1% higher than where you want it to be. But next year, the house is going to be $50,000 more.
Yeah.
So I would say, hey, the rate's temporary. The house is forever.
Yeah.
So if the rate's too high for your taste, you buy them next year. Hey, guess what? You refinance for 1 or 2 years, but the extra $80 a month you'll pay for the higher interest rate is going to negate the $50,000 you're going to pay more for the house possibly in the next year.
Yeah, I think that's something that I've rarely seen somebody come out ahead when they decide to wait. It's usually the other way around. There's usually regret afterward.
Well, because if say the rate drops 2% tomorrow, there's going to be about just a glut of new home buyers going into the market, right, and you don't have a good chance of getting a home.
Yeah.
So actually, I think buying when rates are higher might be even not be smarter.
If you buy it now and then you can refi later, but you got the house that you actually wanted
for the price you want.
Yeah, yeah. So, if somebody buys a house now and rates drop later, what do their options look like there? Right? How does obviously they can refi. Like how do those options look typically?
It's just same basic refi. There are no prepayment penalties on any of our loans. So you can refinance anytime you'd like. So I know I talk to my people, so you're going to save X amount of dollars now. You think you're right, then I would tell them it's probably not entirely on, because you don't want to spend money on your refinance to save $30 a month. Yeah. But once you get your 2% drop, 1 to 2% drop, right, then we'll refinance it. Then you're permanent in that loan forever, and that's it.
So those are all things that you would sit down and kind of consult and advise.
Yes, and then we also try to do maybe a broker price opinion to see if they can lose the PMI. Which would be very helpful. And so it's a lot of things that go into it, but it's something that we decide together. They say, no, I'm ready. So I think you're ready. But the important thing is to make sure they're comfortable.
Yeah.
If I say, something like that, I go, I'm sorry, I don't think it's time. We're not going to do this right now because you don't look comfortable. If you have to think about it, then that means you probably don't want to do it yet. And maybe it's not the time to do it.
Nice. I like that. I like that you take the approach of let's make sure you're comfortable with it. Let's understand each other and versus maybe trying to bully your way into something or force something. Yeah. You're actually being a consultant.
Yes, that's all it is.
I love that. Yeah. So some people get pre-approved, but they still get denied when they go to the closing, right? Why does that happen and how can a buyer avoid that?
Well, one of the biggest problems might be for that is when the buyer is not completely upfront with the loan officer. Mm. And so they might have been deeded onto a house that they didn't bother to tell you about. So you go through the whole process. You're halfway through. I'm like, is there a house on Turnus that you own? You didn't tell me about? Well, my parents put me on the deed 10 years ago. Well, I didn't need to know that. Now the whole situation has changed. You are a homeowner, and that can stall something out. You have to work around that. The biggest one is when a person's in the middle of the process and they decide to go buy a car, a whole bunch of furniture. And I said, didn't I tell you don't buy anything? And I don't know if you remember that scene from Goodfellas. He goes, so when I say don't buy anything, but they bought something.
I love the reference.
Yeah, but
yes.
What's it?
No fur coats.
Yes, no fur coats.
No fancy cars.
No fancy cars or fur coats. Wait, the day after you close, go buy anything you'd like. But don't buy anything until we close. But sometimes they just don't listen. Well, my husband thought I go, no, well, that's a whole other problem and stuff. So we usually solve them. But that's one of the biggest killers of a mortgage is when they're just spending.
Yeah.
And also maybe changing jobs midstream. Well, I go, they just called and said, you're a worker. Well, I just got into a job. Well, I need to know this. You can't just quit your job midstream in the middle of a mortgage. But,
yeah.
What are you going to do? Sometimes people do crazy things.
Yeah. All right, Jeff. So let's put you on the spot. If you had a crystal ball, what's one bold prediction you'd make about housing market in the next 12 to 18 months?
Well, I'll tell you what. If anybody told you they know what's going to happen, they are lying.
Okay.
None of us have a crystal ball. None of us have a crystal ball. And we can.
Are you sure? I could have sworn you.
I'm telling you. I mean, you can listen to the guys at the top or the bottom.
Yeah.
And nobody really knows. The market is in great turmoil right now. And, my prediction is rates might steadily come down, but there's no big 2% coming within, 2 to 3 to 4 to 5 months.
Okay.
The market's pretty good. We're under 6% on some loans, even in the high to mid fives, all depending on the program.
Yep.
Home ready, home possibles, which are very income driven. We'll go over that in the next podcast to know the difference between home ready, home possibles and income driven loans. Those are very important to understand.
Yep.
But if somebody tells you, they come sit down and say, bro, I know what's going to happen. They don't know what's going to happen. No, they do not know what's going to happen.
That's
so
fair.
I can't comment on that.
That's fair. We're gonna let you off on that one. All right, we're gonna switch gears a little bit. We're gonna go into our next segment, which we call Real or Ridiculous, and this is gonna be our mortgage edition.
All right.
So I'm gonna basically hit you with some rapid fire questions, and some might be questions, some might be scenarios, and then you tell me if this is real or it's ridiculous.
Okay.
All right. So the first one: it's impossible to get approved for a mortgage unless you have perfect credit.
Ridiculous.
Okay.
I mean,
elaborate a little bit.
Well, that's going back to FHA. That's the purpose of FHA for mid to lower credit borrowers. You can go down to a 550 credit score with FHA with certain criteria.
Okay.
So that's the thing. So now we have the dings. When conventional, once you're below 620, you don't even want conventional 620. You want to go right to FHA. So that's what it's geared for.
Okay.
So as long as you have gainful employment, and we can fix your credit issues, and yes, FHA is the way to go. But no, you don't have to be perfect to get a mortgage.
That's good to know. Okay. Here's another one. You should always go with the bank you've had an account with for the longest time.
Ridiculous.
Okay. Because that is a myth that I've heard from people in the past.
Just because you have a savings account with a commercial,
so they're not necessarily going to give you a better rate where Chase looks and says,
they don't know
you've been banking with us for 20 years, so we trust you and we're going to give you a low mortgage.
Unless your name is Bill Gates, they couldn't care less about you when it comes to that. That really doesn't matter. Your number, they sit down, and they're retail, so their rates, they might tell you you're going to get a discount, but that's from a retail rate. We're wholesale. We're going to be low no matter what. So that's something that I think is ridiculous. You don't have to do that, and you will not get a much better deal, if any.
Okay. All right. Third one. The lowest interest rate is always the best loan option.
That one's a bit harder to answer. I can say yes and no to that. Obviously, we're all like a low interest rate, but sometimes you want to look at the paperwork and say, well, at what cost am I getting this low interest rate? Because if I'm 1% lower than you, but it costs me $25,000 to do it, then that's ridiculous.
Mm-hmm.
So I'd say, you make sure that your MLO is upfront with you and you know why you're paying what you're paying.
Yep.
And that's the most important thing, is to have an MLO that sits with you and goes over every line item and explains why that charge is there.
That charge is what you're paying for.
No, if he just says, just sign, we'll talk about it later, then no. And you don't do that. You say, I tell my client, are you satisfied with everything we've gone over? Now, are you ready for the signature? Otherwise, let's go over it again.
Okay.
So I'm
going to interpret that one then, that the lowest is not necessarily always the best. You got to read read the fine print.
Yes, read the fine print.
That's fair. What about, there's mortgage pre-approval and then there's pre-qualification. Are they basically the same thing?
Well, I can say yes and no to that also. A mortgage pre-qualification is basically, I'm on the phone with you. I say, tell me your criteria, and they just give me some phone information. Well, then I say, well, if you tell me the truth, we look good. A pre-approval is, no, I'm getting your paperwork, your W-2s. I'm looking at your credit. Then I'm actually getting a real pre-approval. So they're yes and no. It's different, but the pre-approval is more in depth and probably a better way to go to make sure that you know that you're qualified for this home.
Okay, got it. Last one. Ready for this one?
Let's go.
If you put "I promise to pay" in the memo line of your check, your mortgage lender will legally have to accept it.
Well, if it's on the memo line, as long as you fill out the other part of the check, then absolutely, why not?
As long as you fill out the rest of the check.
Yeah, as long as you fill out the rest of the check. But make sure if some dearborn say, bro, don't worry about it. then if it's on the memo line, then it has to be accepted.
Okay, so clearly we're joking here. All right, Jeff. So that last one was obviously ridiculous, but I had to throw it in there.
Yes, of course.
Because I feel like somewhere out there, someone has actually tried to do something like that.
Well, I get that all the time. And, sometimes underwriter come at me with a condition. I'll say, listen, no, I need to know why you made this deposit. And they actually tell me, tell them don't worry about it. It's okay. I'm like, I cannot tell my underwriter, don't worry about it. It's okay. I need to know why this money is there, where it came from. And they are adamant saying that, tell them don't worry about it. And they really, really mean that.
Yes.
I'm like, I'll give it a shot, but I'm going to have to come at you the same question in about 10 more minutes when the underwriter tells me, what are you talking about? So we can go from there.
Trust me, bro.
Trust me, bro. It doesn't work.
Okay, got it. Oh, man. So, Jeff, this has been awesome. Again, I want to thank you for dropping in so much knowledge today. And before we wrap up, though, if someone wants to reach out to you and learn a little bit more about mortgage options, where can they find you?
Well, they can find me online. Actually, I got to remember my my website, milestonemortgagegroup.com, but it's milestonemortgagegrp.com. That's the difference. It's not the whole word group. It's milestonemortgagegrp.com. It's my website. Has all the info about me, my cell number, the office number. That's the best way to find me. Or you can call Empire and they can find me too.
That's another option you've got. There you go. And to everyone that's listening, if you've got value out of this episode, do us a favor, subscribe, leave a review on the podcast. You can listen to us on YouTube, on Apple Podcast, on what else is out there? On Spotify and anywhere else that you can find a podcast. We're usually streaming on them. Again, please follow us, subscribe, and in the future, if there's any insights, questions, comments you guys want to leave, drop it in the comments, and we can start covering those topics for you guys in the future. And remember, real estate isn't just about transactions; it's about transformation. Until next time, take care and keep making moves. Thank you.